So in that last segment, you were looking at snippets of the FERC Uniform System of Accounts, so it really wasn't practical to apply in your day-to-day work because you have to go back now and find your way around. So this segment just has a quick review of that, but a little more specifics on the certain pages, the things that it covers, and you can even use some of this as reference material as you're looking around before you set bookmarks for yourself inside the FERC Uniform System of Accounts. Here's that visual again on how the business works. And you notice from our quick tour of the FERC Uniform System of Accounts that the System of Accounts covers every one of these areas. Remember, it's activity-based. Every one of these activities is covered. Look at the donuts. Donuts. I don't know where you are or what time it is by you, but you can't go wrong with a good-looking donut. All right, enough of that. I'm hungry. Maybe we need a break here. We'll take one soon. So the reference materials has definitions, many pages of definitions. In fact, it defines all the terms used in the system of accounts, and it includes calculations where appropriate. So if you're in doubt on how to calculate the allowance for funds used during construction, it shows you exactly how to do that, or what should be included in construction overheads. It shows you how to do that. And my recommendation would be that set up bookmarks, and then use your find function when seeking a definition for your situation. It's your Alt F or Command F if you're using a Mac. It'll be easier to find your way around the document and get more quickly to the source that you need to record a particular transaction. I will say it's a little difficult to maneuver around the chart of accounts. It's pretty lengthy. It kind of runs on in there, and you'll see that as you go through it. So what I've done here is try to give you some highlights of pages to get to for some of the reference materials that might be of help. For example, the numbering system starts on page 3. They have a section on extraordinary items and prior period adjustments on page 7. They have separate accounts for each project on 16, accounting for long-term debt, deferred taxes, lease accounting. I'm not going to go through these in a lot of detail, but you see the page reference numbers as well. You can find out about emission allowance accounting, which can be a little complicated depending on if you're holding those for use or holding those for sale. OCI, other comprehensive income, and if you have derivative contracts, tells you how to account for those as well. And then I think the real value, or one of the major values rather, in the chart of accounts is the electric plant instructions. Here we have details on electric plant accounting, work orders, historical cost components, overheads, retirement, calculation, what all goes in, what shouldn't go in, all of that. And where FASB and GASB are pretty thin on what they require in their accounting standards for construction, FERC has got the deep details on it. And that's why it's the industry best practice, because the accounting standards don't cover a lot of this. And just by following this FERC Uniform System of Account plant instructions, you will comply with accounting standards. So you don't have to worry about FERC being at the bottom of the stack when it comes to first FASB or GASB and then FERC. And so the instructions here, as you can see on your screen, tell you everything that you should include in construction costs, including overhead costs and the allowance for funds used during construction, which is the cost of money, which we'll cover in a later segment, and is also covered in a lot more detail in our series of library courses on work order accounting. You should check those out. We have a bundle of work order accounting segments, 4 courses on that, but then we have some higher level, short and to the point ones if you're not wanting to get down and deeply into the weeds. But you see the other items on the screen, but the one thing that I'd like to hone in on is number 11, and that is work order and property record system is required. If you're not familiar with a work order system, what a work order system is, you think of it as the bucket that goes out to the garden. Well, the bucket gets filled up with water. In our case here, when it comes to construction, the bucket gets filled up with construction costs. And then you determine where those costs should fall and be recorded in the general ledger. So instead of taking, say you bought a pole, instead of charging it right to the FERC account for poles 364, before you do that, you add the labor benefits, you add the cost of inventory, inventory management, materials management, the allowance for funds used during construction, the use of equipment, and office time as well. So all of that gets added to the cost of it before you classify it in the general ledger. We call that a work order system. And when you install fixed assets, you have fixed asset records, which in electric utility lingo is a property record, so a continuing property record. And you use that continuing property record to take the item off the books when it's no longer in use. So check that out. I would imagine most of you watching this have a work order system, but if not, we have a lot more resources that you can follow on that. Then they have a section on operating expenses that discusses the use of operating expenses, labor, maintenance, outside services. In this section and in the plant accounting section, it defines very well what maintenance is versus capital. It's a good understanding you should have of this, and the recording of it is an expense versus a capital item. So maintenance does what we call maintains the useful life of an asset. So the depreciation rate of the asset assumes that maintenance activities will take place over the asset's useful life. And capital is the addition of a new fixed asset or work that extends the life of an existing asset. Well, let's have an example that kind of drives this home a little better, get beyond the theory. So the question here, is it capital or is it maintenance? Here we have a situation where a new line extension is being built after the trees in the line extension's path are chopped down. So you got some territory of yours that you're putting in a line extension to serve a new subdivision, new customer, and so on. So you have to cut the trees down before you can put in the poles and the overhead line and so on. So the work to chop down the trees is capital because the work was needed to build the line extension. The trees were there, so you had to take them down. That should become part of the cost of the asset. So it's capital. But then, every year after that, you have to trim those trees to keep them off the conductor line of the line extension, or you're going to have power outages. So the depreciation rate of the line extension is 30 years or 3.33%. So the annual tree trimming for that line extension, in fact, all your line extensions that have been put in place prior, is maintenance, because the 30-year life of the extension assumes that the trees will be trimmed to make the line extension last for 30 years. So you kind of get into those gray zones, but the thing to keep in mind is that maintenance maintains the life, capital is new or extends the life. The key takeaways from this segment are this. So the instructions in the FERC Chart of Accounts have details like a roadmap to use in deciding how to treat a transaction. As you go through it, you'll see there's a lot of detail, and we're going to expand on that in the coming sections and get it down into the weeds a little bit more, so that you can focus on that. And the FERC Uniform System of Accounts requires that utilities use a work order and fixed asset tracking system, and it well defines what is capital, what is maintenance, in the FERC Uniform System of Accounts. Now, why, again, is that important? Well, it's expense versus capital, which impacts your rates, which impacts your cost of service studies on how it's classified in the general ledger. So now, we're going to look at using the balance sheet and the income statement accounts, and we'll get to some real practical uses. So I'm just trying to liven it up a little bit. I know it can be slightly theoretical, maybe a little less than exciting, I guess would be a better way to put it. But stick around for the next section, and we'll give you some practical uses of the FERC Uniform System of Accounts, including some journal entries. See you in a minute.